Buenas tardes. I'm very happy to be here, and I'm a little bit ashamed that I can't speak to you in Spanish. I apologize, but it's lovely to be in Mexico. It's my first visit ever, so I was very excited. They told me that it's wild down in Mexico, so I went to Boston first. I got a black eye and 25 stitches. So there you go, right? But it's wild down in Mexico, right? Okay. If you're here for accounting, it must have been because you couldn't get into one of the other presentations, right? Because it's accounting. Terrible. But actually, we're going to make accounting fun, and accounting's become very simple with a new technology we're going to talk about. Not working? Yeah, how's that? See, good. So what have I said so far? Very happy to be here. Stitches. I was told it's crazy down in Mexico, so I went to Boston. I got a black eye and 25 stitches in Boston. So, it's crazy in Mexico, right? I'm ashamed I can't talk to you in Spanish. I wish I could. It's a South African accent. I live in Switzerland. I've got an Australian passport. I don't know where I am anymore. But I know where I am today, and these are my friends. Carlos Cataño, that's his name here. He is the head of color accounting, and all the other team members. Fortunato and the others, where are you? In the back, they're helping here today. We're a team of 4 or 5. Yeah, we're going to have some fun. Accounting, as I said, if you're here for accounting, it must be because you couldn't get in another presentation. But it's easy for me in these talks because people come in thinking it's going to be terrible. And it turns out to be not so bad. Yeah. But it's not too late. There's a dentist outside. They've got a special offer today. It's not so bad. It's not too late. You can quickly change your mind, right? For root canal therapy. Okay. So, I'm Peter Frampton. Carlos, as I said, is there. And we are with this organization, Color Accounting. It's also a new technology that makes accounting much easier and simple. Accounting is very important. It's something, as I'm joking about, that we poke fun at accountants and so on, but actually it's a really important technology in society and in business. I was at a conference once, and there were 200 accountants in the room with their small business owners. And I asked them a question: what is the difference that you see between companies that keep accounts, in other words, we have a dashboard, and companies where they're not keeping proper accounts? And the answer made a big impact on me because it was so simple. Companies that keep accounts are successful. Companies that don't, they fail. Right? The companies, and as entrepreneurs, you have to know what's happening. You have to be able to drive the car by knowing what's going on. So many businesses fail, small businesses, because they don't appreciate what's happening in the business. It can be a very good business, but they make one mistake. I'll give you examples later of a single mistake they made because they didn't understand accounting and the business failed. Okay. Who's your daddy? That's what Carlos said to me. Who's your daddy? So you know that Google says to Uber, they're a bit jealous of Uber now because Uber's so successful. These stitches came from Uber, by the way. Who's your daddy? So Google is Uber's daddy. Uber couldn't happen without Google. But Google shouldn't be arrogant because the internet says to Google, yeah, but I'm your daddy because I make you possible. But yeah, then the computer says to the internet, yeah, but I was here first and I make you possible. Electricity says, all of you, I'm the man. So it's the same with accounting. I've been reading a fascinating book on the history of accounting, and I suddenly realized that I'd been sort of getting it wrong, that I thought you have business and then you account for business. But actually it's the other way around. You have accounting so that therefore you can have business. Accounting is the enabling technology in fact, it's the enabling technology for nations. It's the enabling technology for democracy. I'd love to talk lots more about this today. I come from South Africa and there's corruption, and accounting is part of the solution, and we hold the president accountable, through accounting, but that's not why we're here today. Accounting is the enabling technology for business. And, you might have heard of Luca Pacioli, who invented accounting. No, he didn't invent accounting. He wrote down how accounting worked 500 years ago, and that was in what is now Italy. And you had the Medicis, the patrons of the arts, incredibly rich, not as rich as Carlos Slim, but very rich, patrons of the arts back then in the 1500s, and they lent money to the popes and in the Vatican and so on. And those businesses were possible because of the new invention of accounting. So, yeah, point is made. Accounting enables business. Accounting is an enabling technology for your business. So here's the problem, though. Accounting was expensive, and it was difficult. But we've solved the problem. Society, not just color accounting. Color accounting has helped, but that is no longer a problem. I went with Carlos yesterday to meet with the president of the Institute of Accountants here, 15 minutes from here in Mexico. It was a great pleasure. And in the lobby, they have all these old machines. That's a pretty impressive accounting machine. There's an electric motor underneath. These are all, I don't know if you can see, these are the numbers, and then that's for typing, so the main thing is the numbers. And that probably cost as much startup capital as your small business, right? That's an expensive machine. But that's not the case anymore. The internet and the cloud has enabled cheap accounting, online accounting systems. This is a shameless plug, shameless advertisement, right? Because Carlos, that's his business. I've got nothing to do with it, right? He doesn't know that I put this slide here. He's got online accounting software that he put up there, that I put up there, rukat.mx, right? So really, it's inexpensive, and you can do it. Anyone can do it. There are others, QuickBooks. What are some of the other ones? Xero and so on. So the actual accounting system is cheap these days, but that still leaves us with the problem that accounting was hard. The way Pacioli wrote it, it was obscure. The language is all confused. Well, what you've come to find out today is that in one diagram, we can explain accounting. And it works so well that people said, why didn't they do this before? There's a good question, and the answer is because there was no color printer. And we started color accounting. No, but it's true. In 1996, there's been color printing on Heidelberg presses, big printing presses, but the Hewlett-Packard inkjet color printer came along in 1996. And we started playing around with color in 1997. And I won't bore you with the details, but I've talked to neuroscientists. The human brain processes color faster than sides. And accounting used to be just based on sides. Left accounts, right accounts. You would left a left account, and you'd right a right account, and left a right account. It's enough to give you a headache. Color makes it simpler. Okay, so we're gonna deeply explore this diagram. And we need to take these critical statements, the balance sheet and the income statement, and make it so that you fully understand them. So we're going to add some color, and we turn it into a diagram. You see what we've done there? Sorry, the slide was a little bit jumpy. But essentially, we've taken traditional financial statements, and we've made them into this diagram. When you understand the structure of this diagram, the language, the words of this diagram, you understand accounting. It's as simple as that. The structure, the language, and a little bit of the movement. Up, up, down, down. You can also have up, down. You can have two on one side, right? So that's what we're going to do, and that's what this paper is for. Okay, so in fact, let's get going. Have your highlighters ready, and you work in pairs. So we've got this diagram, and we need to explore what it means. We call it the basis framework, right? Because that's balance sheet, income statement framework. And the beauty is, there's just 5 boxes. 1, 2, 3, 4, 5. There is no 6th box. Only 5. So if you understand these 5 boxes, you don't have to worry. Nobody can one day say, yeah, but you don't know about the 6th box. You know, we work with a lot of lawyers. Color accounting has been quite successful in the United States and London with some of the very top law firms. The lawyers, they're not deep into accounting, but they use the financial statements at a high level. And they're terrified because it's lawyers, right? They're fighting each other. They can't afford to look stupid. And we say they love it when we say there's no 6th box. That's it. So you can ask away, you know. Even the biggest frauds in history in America, Enron, WorldCom, they're just mixing up boxes. Enron mixed up that box and this box. WorldCom mixed up that box and this box. It's so simple. So let's get into it. Take your highlighter. Well, let me say one thing first. Accounting is really all about tracking funds. Funds is like energy. You have the sources of energy and the uses of the energy. Where the energy comes from, how the energy manifests, right? You can think of funds as money, but it's a little bit broader than money. This is like the sunshine, it's the energy, and this is what we do with it. Okay. So, assets are a manifestation of the energy, right? So, highlight that in green. Take your highlighters, please, everybody. And it must be green, not yellow. Take your green highlighter and make assets, activos, must be green. Because they are a use of this funding. We're going to explore where we get the funding from, and then you use it to acquire assets. The key thing about assets is that they're valuable. Nothing else is valuable. If something's valuable, it's an asset, right? People often say, my car is a liability. No, it's not. People sometimes say that a toxic waste dump is a liability. No, it's not. Anything physical is an asset, and anything valuable is an asset. Why I say physical, and why I'm emphasizing valuable, is because a big mistake, the biggest mistake that people make in business and accounting is, for example, they think income is money. We're going to explore what income is. Income is not money. You cannot touch income, and you can't even it's not even valuable. Income's not valuable, believe it or not. And income doesn't come in. So what is income? I'm getting ahead of myself. So, assets are valuable, valioso. They can be physical. That's not important, but it just reminds us that nothing else can be physical. Only assets can be physical. Of course, we have assets that are not physical. Accounts receivable, intellectual property, patents, trademarks, goodwill, your reputation. These are all things that are not tangible, physical, but of course they are valuable, so they are assets. The last thing we want to discuss about assets is that when you look at a company's balance sheet, and again, this is a balance sheet, not all the assets are there. A lot of assets are not counted. You see, for example, in your businesses and in law firms and so on, people are usually the greatest asset. In fact, people are physical, so you could say they're an asset. But according to general practice, generally accepted accounting practice, we don't count people as assets. Why? Because to be counted as an asset, you have to satisfy two tests. You have to be able to measure it, and you have to control it. I don't think you can control people, they're uncontrollable. But also, we can't measure it, right? So if you can't measure an asset, you ignore it, which means a lot of assets don't get counted. What I want you to take away from this is an appreciation that a balance sheet can only do so much. You see Google, for example. The balance sheet of Google says that Google is worth $200 billion. If you go to the stock market, the NASDAQ, and you look up the market value of Google, the market value is about 450 billion. So we've got two values. The book value is 200 billion. The market value is 450 billion. Where's the missing 250 billion? It's all the assets that we don't count because Google can't measure them. Google would be guessing, so they just leave it. Okay, so we're going to start our business. We've called this Global Services. It's very important to remember whose point of view we're telling the story from. We're going to tell the story from Global Services Incorporated's point of view. We need to get funding to start the business. So where can we get the funding from? Loans, thank you, and equity, good, exactly. So we can get from loans, pasivos, and capital, which is equity in English, right? Now, just like we've done here, we need to be very clear about what these are. This is the big misunderstanding in accounting. If you go to a dictionary and look up what is pasivos, liabilities, it probably will say something like this. It's money you owe someone. Do you think that's true? Is that correct? Yes? Okay, so I've got some yeses. Thank you, sir. It's fantastic to have you here. He's very good looking too, ladies, if you want to come and check it out, right? Sit. Okay. They're going crazy back there. You can't see. The dictionary says this is money you owe someone. That means that's money. Is that money? I see some nodding. No, that's not money. Not always. Okay, so he says not always. No, never. That's never money. What is it? It's an obligaciones. Excuse my pronunciation. You see, you cannot see an obligaciones. Sione, single, right? You can't see it. If I owe you something, that's an obligation. You can't see it. It's a legal idea. It's a legal construct, right? And that's what a liability is. Now, one of the big mistakes of accounting is that all of these are measured in dollars or pesos. So dollars, but there are no dollars here. But where's the actual dollars? Where's the physical dollars? Here. you see there's dollars as a unit of measurement, and then there's dollars, actual dollars, the money, right? So that's a big mistake people make. There's no money over here. Now, the next, let's look at capital, equity. We kind of like that more. So we sort of think that's bad, and this is good. Well, actually, they're both obligations. It's just, if you could make that one disappear, great. Whereas this, the company, Global Services, is obligated to the owner. The company wants to be obligated to the owner because that's the master. It's obligated, that's the, as the French would say, the raison d'être, the reason for the existence of the company is to be obligated to the owner. But again, to be perfectly clear about these things, both of these are obligations. This is the obligation to lenders. This is the obligation to the owners. Good. So far, so good? Okay. Turn to your neighbor for 30 seconds and talk to them about what you're getting so far. Check in with your neighbor how they're doing. If they're a stranger, all the better. Do you want to get a roving microphone? That handheld microphone?
Okay. Yeah.
Okay. All right, let's go again. So, sound good? Yeah. Okay. Any thoughts, questions so far? All good? We've got a microphone here. There we go. I'd love the questions. Hang on. I'm going to listen.
Hello. Yeah?
Yes.
Sorry, how do you measure the reputation of a company? Like, what is the measurement or the unity or what?
So, the question, as you heard, is how do you measure the reputation of a company? It's definitely valuable, right? Sometimes it's the most valuable thing. Usually you can't measure it. So therefore the reputation does not go here. We call it goodwill, but because you can't measure it, we ignore it. So like the goodwill of a law firm, million, 10 million, 100,000, don't know. So just leave it off. Now, if you're a law firm and you bought another law firm for $1 million pesos, I'm making up the numbers, right? And this law firm, the only thing it had assets on its balance sheet was some furniture for 300,000 pesos. And you paid $1 million. So what did you buy? Tell me what you bought.
The mobile, how do you...
Yeah, furniture.
Furniture, yeah.
300,000, and that's 300. Therefore, the 700 must have been the reputation. So that's goodwill that you know how much it's worth. So now this is called acquired goodwill. Because you know how much it's worth, you can put it here. Because you bought it. Okay. Another question at the back there? Yes?
The positioning in the market, the trademark.
Good. Won't you just say it again in the mic so everybody can hear?
Yes, in English is okay. ¿En español?
Yeah.
Bueno, in English. We can
Spanish
also
or English? I can hear it here in English if you want.
It's okay. We can talk about the Volkswagen case now. How much it hurt the company, the fact that they have this problem with the diesel cars. And this is based on their image and their reputation.
Yes.
And the stock market really impact negatively the company. It costs a lot.
Exactly. So thank you. That's a very good example. You hear that? That's about Volkswagen, right? The value of Volkswagen in the market has dropped by 33%, a third, right? The balance sheet of Volkswagen did not change. Nothing changed. What changed was the reputation and the reputation's not on the balance sheet. So that's why the market knows that, whoa, the reputation is not worth what it used to be. Good example, thank you. Okay, so so yes.
Let's say Coca-Cola that has a positive goodwill,
Yes.
and now Volkswagen has a negative one. Do you reflect that negative on the assets?
So Coca-Cola has
Grow.
positive goodwill, Volkswagen has negative goodwill. I don't know if Volkswagen has negative goodwill, they just have less. So as I said, nothing changes on the balance sheet because you see there are two stories. There's this balance sheet story, and then over here, I'm standing this side because this is where the owners are. They judge how much the entity is worth, and that's called the market value. And the two stories are the book value and the market value. Is it? Okay? So yeah, as I said, Volkswagen, no changes on the actual balance sheet. All right, let's keep going. So we started our business, global, and we had two sources of funds. We incurred obligations to lenders. We incurred obligations to owners. And you know, these obligations are different. This one pays interest. This one pays dividends. This one you must pay back first if the company goes bankrupt. This one you pay back last. This one doesn't have control. This one has control, votes, and so on. All right? This is a contracted amount. You agree how much this one is. This one is whatever's left over. So this is a calculated amount. Contracted, calculated. Okay. So these are the sources of funds, and we got some assets, right? Now, the best source of funds is if we do the work, right? So let's go out and we'll do some work and we'll get some assets, right? We'll get some assets because people pay us. Who is going to have a claim on the assets that we get because we do some work? Sorry, call it out again, sir. Capital, exactly. Thank you. So you see, what happens is you go out. What's your name, sir? Jesus. Jesus goes out. He does some work. Then he brings back 400, right? And so there's 400 bucks in the bank. Who does the bank manager say that's mine, or does the capital, the owners, say mine? Clearly, it's the capital. So we see that the next source of funds is profit, utilidad, right? That is a source of funds. It's the best source of funds, right? So take your purple and make a box like that inside. Well, you see it's there. Make that little square box. Purple. Check your neighbor. If your neighbor's not doing what you're doing, castigate them. Okay, so that's the profit. So let's make up a story. We get 400, Jesus comes back with $400 or pesos, whatever it is, and that shows up as profit because it shows that it belongs to, we earned it on behalf of the owners, right? Again, that's not money, that's an obligation. But we're obligated to the owners for the extra money that showed up. Now, we've got a problem though, because actually, Jesus, if we look closely, he earned 700, and then he came back and he caught a taxi and it cost him 300 because Mexico City traffic is so bad, it was a lot. And so 300, so actually 400 was the net. In other words, we need a place to tell the story of the profit. Jesus, what happens when you double-click a folder on your computer? It opens and shows the folders inside. Yeah? Yesterday they said, no, it crashes, right? So, no, it opens. And so take your purple and open up these two boxes. Make a purple all the way around. And what we've just discovered is the income statement. This is the income statement. The income statement explains one number on the balance sheet, right? Give you time. I'll go slowly because all the men can only do one thing at a time. I'm allowed to say that. Okay, good. Now, the heading, source of funds, applies all the way down. Therefore, let's make this one yellow, and use of funds is all the way down. So this is the second use of funds. This is the third source of funds. So make sure the bottom boxes, yellow on the right, green on the left. Okay. It's fun, right? You didn't know you were going to kindergarten. Okay. So, the main reason you've come today is to find out what these two concepts, what they mean. Ingresos and gastos, exactly. But what are they? You know what? I believe there's no one in the room who can tell me what they are. I'll tell you why. Because I went to London and we met with 50 CFOs, finance officers, and we said, what is a gastos? Nobody could tell me. No, it's crazy. It's the craziest thing. An accountant knows what an expense is. They see what it does to profit. They know how to account for it, but they can't explain it. It's called a declarative ability. I'm not sure how you're going to translate that. Sorry. I'm going to start making up words that she has no idea what they are. Okay. I'm sure she's very good at her job. I met her. She is. Are you blushing, ma'am? No. Okay. So, what is income, right? What is income? If you go to the dictionary, it says it's money you earn from your work, right? Is that right? No, not no. Why is it wrong? Because if it's money you earn, that says that that's money. Where's the money? Honey. Good. Where's the money, honey? It's up here. That's not money you earn. So what is it? It's very badly understood. So some typical words in English, sales, so ventas, right, Carlos? Yep. Sales, revenue. Yep. These are the words we know. But what does it mean? So it turns out income is a verb, not a noun. It's a verb, not a noun. You see, income is what you do to get that. This is the doing, that's the getting. This is what you do, that's what you get, right? And what are these? These are valuable. This is the activity that gets you something valuable. Therefore, here's the definition of income. Value generation activity. Value generating activity. Please, this is the main thing. As I said, the language even is wrong because it's ingresos doesn't come in. Because what comes in is cash. This is what you do to get the cash. I'm repeating myself now. Okay. Similarly, expenses are a verb, not a noun. This is what you do that consumes the assets, right? If I had a piece of paper, I should have a piece of paper up here. Let me show you how to expense this. I'm going to tear the corner off, right? So I just expensed that. It used to be worth $1, 10 pesos. Now it's worth nothing, right? Because I destroyed it. So you see, when was this paid for? Maybe somebody paid for it yesterday. Maybe someone's paying for it now. Maybe someone's going to pay for it tomorrow. It doesn't matter. It's not about payment. It's about when you destroy it. You see, again, this is the activity that consumes assets, right? So you could consume, destroy, obliterate, annihilate, whatever. At a restaurant, you eat it and so on, right? All right. I can't emphasize these two enough. What's the sound of income, by the way? The famous sound of income. Ka-ching. I did it again. I can add Mexico to my list. I've been to Vancouver, Sydney, Poland. Everybody says ka-ching. They're all wrong. You're wrong. But anyway, everybody says ka-ching. I'm making fun here, right? Because what's ka-ching? You know, I've got another handsome gentleman there. He's smiling. He knows ka-ching is up there. That's the money. This is the activity, right? So in a hair salon, snip, snip. In a lawn mowing business, vroom, vroom. It's the work you do. This is the work. That's what you get. Similarly, that's the using up. Okay. And there it is. You now understand the meaning of these 5 concepts, and that's all there is. Everything in accounting is a variation, happens inside of this. Valuable, obligation to lenders, obligation to owners, value-generating activity, value-destroying activity. Okay, let's test it, okay? So, let's get that microphone going. Carlos, do you want to just... let's look for a volunteer. I'll choose a volunteer. Okay? Have we got, anyway, just pass it to someone who's prepared to have some fun with me. So would you work with me? Here we go. Anyway, just there. Yeah, that's fine. You stay there. It's fine. You can do it from your seat.
Okay.
Stay there.
Okay.
I think you need your earphones on, right? Okay. So, you go out and you earn 700 pesos. No, sorry, I'm getting ahead of myself. Let's go back. You borrow 30,000 pesos for the company. How are you going to show it in the picture? Talk to your neighbor. He must help you. Where's it going to go? So you get the money, right?
En
Yeah.
activos,
Yeah. Where does it go?
en la pasivos.
Very good. So you have
Así
30
es.
there.
Ajá.
Okay. Is that the money?
Así es. Sí, correcto.
But there's no money
No.
there. Your neighbor's saying no.
Sí.
Where does the money go?
En utilidad.
Activos, right?
En activos.
Very good, very good. So write that in, everybody. That's the first transaction. Round of applause, please. You can give the microphone to the next person. He thought he was so lucky. Very good. And you can highlight this one in green and this one in yellow. We always have a green number and a yellow number. That's called double entry. Okay, so you go and you get 20,000 pesos for the business, but this time it's from the owner, and it's invested. It's not loaned, it's invested. How do we show that?
Capital.
Very good, very good, and
Y activos.
very good, perfect. There it is. 20,000 goes up in assets, and 20,000 goes up in equity. Another round of applause, please. He's very good. We might as well just keep going. If you really don't want it, you can pass it on. So, no. Okay, come on. It's easy. It's easy.
Okay.
Now, you go out and we start work immediately. And you go out, you do some consulting, and you bring back 700 pesos in an envelope to the business. Let's record that.
En ingresos
Very good. Very good. There it is. It's there. Yeah. Yeah.
y también va en activo.
Very good. Very good.
Yes.
Okay. So there it is. That's the work you did, and that got you the assets, right? Okay, and one more person. Good, we've got a courageous volunteer there. To do this work, you called a taxi, and it cost you 300 pesos. How do we record that?
Lo metería en gastos.
We put it in expenses, gastos, good. And is that up or down? Up or down?
¿Para abajo?
Down. I've got about half the room saying down. What went down? No. No, the money went down. You see, this is the big confusion again. We think that's money going out. No, it's not. The money went down. You've got more gastos. You see, the definition of gastos is the activity. You had more activity. That was using the taxi. And of course, it made the money go down. Okay, this is very good. We're practicing using this framework. I've got to watch the time. We started at 2:15, so I'm assuming we finish in, Carlos, is that right? 3:15, right? Okay. So let's move on. The beauty of this is that it doesn't just tell us accounting, it tells us how business works, right? And we call it the value cycle. This is what the cycle that was mentioned in the name of this presentation. So turn over the page, and you'll see there's a picture of the cycle on the right-hand side. This is how business works. I had an entrepreneur say to me, this diagram changed my whole mindset, how she saw her business. It's a very powerful diagram. This is how business works. The business gets investment from an owner. Of course, you incurs an obligation to the owner, which brings in cash, right? But that's not enough. So the business leverages it using other people's money from FF and F, friends, family, and fools. With these two sources of funds, the business acquires assets. The only reason a business has assets is to generate income, which is to say, get more assets. Unfortunately, you have to destroy value. That's the definition of expenses now, the destruction of value. Why would anyone destroy value? Well, we destroy value because it gets us value. So there's this tension between value destruction and value generation. Who gets the surplus? It goes to the owners because they took the risk. Remember, they were going to get paid last, they were going to get paid first. So that's why it goes to the owners. So this is the very simple but profound value cycle of business. There's only two things happening in your businesses. You're destroying value and you're generating value. Of course, you're managing cash flow, you're arranging funding, all that. But essentially, at the end of the day, you're destroying value and generating value. And you've, of course, got to make sure that you're generating more. Not all the value you generate shows up as recorded assets, because, of course, sometimes it shows up as reputation and so on. You must be aware of that. But at the end of the day, value destruction, value generation. If you think of this cycle going the other way, it's a budgeting cycle. I want to make this much profit. That means I must make this much sales. How much expenses will I need? How much assets will I need to support those expenses? If I need that many assets, how much borrowing do I need and how much investment do I need? Isn't that nice? It's a budgeting cycle. Okay. So, we're going well here. We can't leave you with this framework. It's a very powerful diagram, but you need to recognize the traditional format, right? So have your highlighters out, and we're going to look at the traditional balance sheet and income statement. It's in English, so here we've got activos. So let's remind ourselves what activos are. So take the uses of funds, put your green around assets, activos, and write the definition. Valioso, okay? Liabilities, put a yellow around liabilities and write obligación to lenders, and equity is obligation. Whoops, sorry, got ahead of myself here. Equity also is yellow. Sorry, I think I'm going a bit fast. Green assets, valuable. Yellow liabilities, obligation to lenders. Yellow equity, obligation to the owners. Okay, then profit, right? So put around that number 76,869. Sorry, is that a question? If you need a microphone, just put up your hand. Okay, can I keep going? So put a purple around 76,869, that's at number 3. And draw a purple all the way out the side and all the way around the income statement. Because this was the double click that opened up the income statement. Okay, work in your pairs. How much value did the company generate during the year? Total sales. Highlight that in yellow. Right? That is number 4. How much value did the company sacrifice? Sorry, I'm in your way there. How much value did the company sacrifice during the year? So highlight 320, 136, 130, I haven't got my glasses on. 250, 15, 16, all of those number 5, highlight that in green. So to remind you, the sales in yellow, all the expenses, here's it's only showing 3, you've got 4 expenses in green. Next to number green, next to number 5, write down this number. 1418, start again. Next to number 5, write down 1418882. 1418882. That's the total expenses. And finally, next to number 6, or you can highlight number 6 in yellow. There, number 37678 in yellow. What we want to do now is turn this into a story, and then we've achieved what we wanted to do today. We want you to be able to read a balance sheet, read an income statement, and make sense of it as a story, a real story with a beginning, a middle, and an end. Okay, you ready? Here's the story. At December 31st, Global had assets totaling how much? Very nice. 1,093,428. Thank you. I like hearing the numbers. Keep going. Keep going. Very good group here. In use for a purpose of generating a return for the owners. Global partially funded those assets with
824,399.
perfect 824,399 of debt, which equates to 75% of the assets, of the asset value. The remaining portion, how much? 25%, very good, sir, you get the prize, of the assets in the amount of 269,029, thank you, was funded by Global shareholders. In 2018, Global generated value for its shareholders by generating perfect 1456560 in sales revenue. In order to deliver those sales, Global consumed value by utilizing Perfect, well done. Of resources as expenses, resulting in net value generated of 37,678. Fantastic. Which is reflected as profit within the retained earnings of 76,869, which was reduced because we paid a dividend of 4,000. Okay. Everybody good? Nope. Oh, I'm getting the signal that we're up time, I'm afraid, from the back. Thank you very much. If you, we'd like the highlighters back because we've got another session, so if you drop them in a bag at the door. Carlos, thank you. We have a stand at the expo if you want to come and visit us and find out more about color accounting. We'd love to see you. Please give yourselves a round of applause.